In the first episode, we explained how Canada calculates your taxes, the overall system, the flow, and how the final number is produced. If you have not watched that episode yet, start there. This video builds directly on that foundation, and it will make much more sense when you understand the full system. Now let's address a question many people quietly ask, but rarely get a clear answer to. Why do two Canadians earning the same amount of money end up paying different taxes? At first, it feels unfair. Same income, same country, same year. But in most cases, the difference has nothing to do with effort, and everything to do with structure. The Canadian tax system does not look at income as one single thing. It looks at income by type. How you earn your money matters just as much as how much you earn. That single idea explains most tax differences in Canada. Let's walk through a simple example. Imagine two people living in Canada. Both earn $60,000 in a year. Same total income. Same calendar year. But when tax season arrives, their results are not the same. Here is why. The first person earns all $60,000 from a job. This is employment income. Tax is deducted automatically from every paycheck. There is very little flexibility. The system treats this income as steady, predictable, and recurring. Employment income is straightforward, but it is rigid. Now look at the second person. They also earn $60,000, but their income is structured differently. $45,000 comes from a job. $10,000 comes from dividends. $5,000 comes from selling investments. Same total income. Different structure. This is where the tax outcome changes. Employment income is fully taxable. Dividend income is treated differently. Capital gains are only partially taxable. So even though both people earn the same amount of money, the tax system processes their income differently at multiple stages. This is not a loophole. It is intentional. Companies already pay tax on profits before paying dividends. Capital gains often come from long-term investing and risk. Employment income comes from regular, predictable paychecks. The system recognizes these differences and applies different rules. This does not mean employment income is bad. It means employment income is simple and stable, but not flexible. Understanding this distinction is important, because it affects more than just your tax bill. It affects your decisions. For example, it affects how our RSP contributions work. It affects how TFSA withdrawals matter. It affects which income feels efficient at different stages of life. This is also why tax advice can sound confusing or even contradictory. You might hear someone say dividends are tax efficient. Someone else might say dividends increase their taxes. Both statements can be true. It depends on total income. It depends on province. It depends on what other income exists. And it depends on timing. Context matters more than labels. Early in your working life, most income usually comes from employment. There are fewer choices, and simplicity matters. As you start investing and building assets, income types begin to change. That is when understanding the system becomes more important than working harder. Not because the system is unfair, but because the system is structured. People who feel frustrated by taxes often feel that way because they only see the outcome, not the mechanics behind it. Once you understand the mechanics, the outcomes stop feeling random. Here is the key takeaway. Two Canadians can earn the same amount of money and still pay different taxes. Not because one cheated. Not because one got lucky. But because one understands how income works inside the tax system. That understanding compounds over time. It influences how you invest. How you use registered accounts. How you plan for retirement. And how you react to changes in income. Taxes do not exist in isolation. They shape almost every financial decision, whether people realize it or not. If this explanation helped, go back to episode 1. That video explains how Canada calculates taxes from start to finish, and it provides the full framework for everything we discussed today. If you are finding these explanations helpful, like this video. It really helps the channel grow. Subscribe to Maple Money Playbook if you want clear, calm explanations about money in Canada, without hype or shortcuts. And leave a comment below. Which income type do you want explained next? Employment income, dividends, or investments? I read the comments, and they help shape future episodes.